Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 15th, 2025, and we're diving into Albertsons' first quarter fiscal 2025 earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Albertsons has reported some interesting numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Albertsons reported net sales of $24.88 billion for the first quarter of fiscal 2025, marking a 2.5% increase from the previous year. John, what are the key drivers behind this growth?
Albertsons' growth was primarily driven by a 2.8% increase in identical sales, with strong contributions from their pharmacy operations. Additionally, digital sales saw a significant 25% increase, reflecting the company's successful investment in digital platforms. However, it's worth noting that lower fuel sales partially offset these gains.
And how did this impact their profitability?
Despite the revenue growth, net income was slightly down to $236 million, or 4.1 per share. This was due to a decrease in gross margin, which fell to 27.1% from 27.8% last year, largely because of increased investments in customer value propositions and higher delivery costs.
EPS performance and analyst expectations. Albertsons reported an adjusted EPS of 55 cents, surpassing the analyst forecast of 49 cents. John, what does this tell us about the company's performance?
This is a positive indicator. Beating the EPS forecast suggests that Albertsons is managing its operations efficiently, even amidst challenges like increased delivery costs. The adjusted net income of $319 million also highlights their ability to maintain profitability through strategic investments and cost management.
How significant is this beat in the context of market expectations?
It's quite significant, especially considering the forecast was based on a survey of 5 analysts. Surpassing expectations can boost investor confidence and potentially lead to positive market reactions.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Albertsons reported an adjusted EBITDA of $1.17 billion. How did they achieve this, John?
Albertsons managed to decrease their selling and administrative expenses to 25.4% of net sales, down from 25.9% last year. This was achieved through lower merger-related costs and leveraging employee and operating expenses. Their productivity initiatives have been crucial in offsetting inflationary pressures.
Looking ahead, what is Albertsons' outlook for fiscal 2025?
Albertsons has updated their identical sales growth forecast to a range of 2.0% to 2.75%. They are also maintaining their adjusted EBITDA guidance between $3.8 billion and $3.9 billion. This reflects their confidence in continued growth, supported by strategic investments in digital and technology platforms.
Capital allocation and strategic initiatives. Let's discuss Albertsons' capital allocation strategy. They repurchased 14.2 million shares and announced a quarterly dividend of 15 cents per share. What does this indicate about their financial health?
These actions demonstrate Albertsons' strong cash flow and commitment to returning value to shareholders. The share repurchase program, part of a $2 billion authorization, and consistent dividend payments reflect confidence in their financial stability and future prospects.
What about their strategic initiatives in terms of store operations?
Albertsons completed 36 remodels and opened 3 new stores, which shows their focus on enhancing customer experience and expanding their market presence. These investments are crucial for sustaining growth and competitiveness in the retail sector.
Key takeaways. In summary, Albertsons has delivered a solid performance in the first quarter of fiscal 2025, with notable growth in digital sales and a successful beat on EPS expectations. John, any final thoughts on their investment prospects?
Albertsons is well positioned for continued growth thanks to their strategic investments and operational efficiencies. Their focus on digital expansion and customer engagement, along with a strong capital allocation strategy, makes them an attractive option for investors.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Albertsons' performance in the comments below.